Hi, good morning and welcome to Ask the Expert, an award-winning daily series from 8:30 to 9 to help small businesses. If you have any questions, please do ask them in the comments of the live feed. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts are there 24/7. During the live session, we'll be running a poll, so please do engage with it, and I'll reveal the results at the end. And do please make sure you register for QuickBooks free annual conference. It's on the 8th and 9th of March. I've been to it before, excellent, and do make sure you register and take advantage of that free annual conference. Anyway, it's very nice to be back with you again. My name is Glenn Collins, and I'm Head of Policy, Technical and Strategic Engagement at ACCA. So ACCA is the Association of Chartered Certified Accountants, and we're the world's most forward-looking, thinking professional body. We believe that accountancy is vital for economies to grow and prosper, which is why we work all over the world, building a profession to make society fairer and more transparent. We have more than 233,000 fully qualified members and 536,000 future members. All around the world, actually helping many businesses like yours. Anyway, let's move on to the particular topic, and you'll see that the squeeze on cash is coming in April. So I'll go into why we're saying that. And actually, before we start, just a quick couple of calls to action. Just perhaps think about some of these. So number one is, as a small business, please do think about what action you can take to put yourself in the best position, because getting your finance arranged and getting the best and the right type of finance actually takes time to arrange. Often the finance we both need is when you're under pressure, when you want to actually take opportunities that have come up. It might be sales, it might be you've got some staffing to organise and arrange, but actually you find you need finance then. And it is important to perhaps take some of the pressure off yourself and think about what you need. So why are we saying at the moment, the squeeze on cash is coming in April? Well, we've run some results and survey results with our partner, ACCA and CFN. Survey results revealed that 1 in 4 UK SMEs are expected to struggle to meet their payroll costs in April. Partly that's caused by the national insurance increase, and I'm sure many of you are aware or put that into your plans already, 1.25% increase for businesses, and also a 1.25% for employees. This paired with the actual surging inflation, 5.4%, but is actually going even higher, and serious inflation in wages and commodities means that actually many businesses are going to feel the pinch, and that pinch actually comes through in cash. Additionally, the accountants we surveyed, 1 in 5 small businesses, they felt 1 in 5 small businesses may run out of cash within the next 12 months. But it's not all bad news. 38% were very, very hopeful of growth in the next 6 months. But this isn't matched by that awareness of what finance is available, and 68% of businesses were unaware of the support that was available. It's really important to actually do spend some time and do look at some of that financial support and awareness. Some of the knock-on effects are awful, and we have seen an increase in mental health anxiety. So over a third of those accountants, 35% stated their SME clients are feeling more stressed, more anxious than usual, and that was actually up on an increase of 15% before Christmas. So with this, there is almost a tendency to look and say there's going to be some high business failures. There's probably going to be some delays in getting paid. And actually going back to that original action point, how do you look after yourself? How do you actually protect yourself? Well, one of those areas is actually looking at your supply chain and assess how you can leverage that capability. And it's never probably been more important to undertake a really boring task, but actually a vital task. And that's actually looking at who you grant credit to. So trade credit is probably the easiest and most important source of short-term finance available to business. It can be cheap, and it's very, very effective. And trade credit means many things, but actually in its simplest definition, it's an arrangement to buy goods or services on account without making immediate cash or cheque payment. So trade credit is a helpful tool for grain businesses when favourable terms are agreed with that supplier. You get the goods or services and delay paying for them. The arrangement effectively puts less pressure on cash flow than an immediate payment. And this type of finance is helpful in reducing and managing. Situation also applies. So this is where your customers or your clients may request favourable credit terms. Put it simply, any terms agreed with your customers or your clients will reduce the benefit you have obtained through trade credit negotiations with your suppliers. So, for example, if you've agreed a credit term of 30 days with your suppliers and a credit term of 45 days with your customers or your clients, the net deficit will be 15 days. That's the net amount that affects the working capital of your business. Actually, you need additional funding for that 15 days. So if I put some of that into a simple term, so for example, if I buy and I spend £100 of stock in week 1 and pay for it, and in week 2 I sell £200 from selling that stock to one of my clients, but I give them credit. In the same week, I spend a further £150 on stock. So at the end of those 2 weeks, I spent £250 more than I had. I've made a profit of £100, and I'm owed £200, but I need to finance that £250. So actually, what can you do? What are some of the areas you can look at? How can you address that? One particular area is know the impact of those terms you've agreed, as we've just explained above, and then look actually to manage and smooth the impact of that cash flow. So, for example, you could look at cash flow finance or invoice factoring. It normally takes a couple of weeks to arrange, but actually once it's arranged with banks or other providers, you can access the cash electronically, and that's generally after the invoice upon which the finance has been provided has been uploaded. So the cash is available to withdraw very quickly, quite often within 24 hours. Additionally, and this is really where we come into the more difficult areas, it's important to understand who you're giving credit to, and check that they're in a position to pay you. I mean, you're lending them your money, you're giving them credit, so actually you want to know, will they pay? Will they pay you back for that? And this is where you may wish to either use some of that credit reference requests that come through from some of the invoice factoring, but actually also some of the credit reference agencies. And you might want to do a business check on those. Do remember actually that banks and other lenders and investors, they actually use the same type of credit checks when they're looking at making lending decisions for you and about your business. So another area you could look at to actually protect you on some of the trade credit is actually trade credit, and it's really important to actually put some of that in place. So what would you do? Start planning now for actually some of those financial needs going forward in the future. But why start some of that planning? Because we've said going through just giving that example of trade credit, important to know who you're giving money to, important to know why you're giving the money and the impact that comes through. And how do you know that? Some of that will come through with planning. So actually invest some time in planning and look at the finances you may need coming through in the future, particularly from April onwards. Just a very, very quick anecdote more profitable businesses fail because they run out of cash. And you don't want your business to be one of those statistics that's a profitable business but actually fails to exist because they run out of cash. They can't arrange the cash in time. So do look at that. And I suppose one of those areas which puts an awful lot of people off is, does planning need to be complicated? Well, actually, you can make it as complicated or as simple as you wish. I would say keep it very simple and actually decide on what you need in your business to plan ahead. Use the software, and I think that's one of the great benefits of having good software and good systems is it will help you integrate some of that planning and use it in your day-to-day going forward. Understand when those pinch points might come. For example, when your VAT payments are due, or when you've got a big bill to pay, or what happens if somebody doesn't pay you. Important to actually have that coming through in your planning. Additionally, with that planning side, you've got time and you can make arrangements to look and put in appropriate sources of finance. And that will be cheaper by its nature. So you could look at loans, you could look at overdraft, you could look at factoring, you can look at HP leasing, you could even look at external investors out there. But work out, is there a core funding need, and actually how will I take advantage of that. Additionally, look at grants, because actually you'll have time to look at grants to work out whether they're available to you and how you can access some of those. That gives you a bit more time to actually plan through some of that, because you're not rushed or you're not thinking, actually, I need to arrange emergency finance. One area to really look at strongly, and this is really about why plan and why reduce some of those costs, avoid some of those punitive interest rates and penalties. I mean, we do have one coming up at the moment. So I'm sure, as many of you remember, and I know you're covering some of this in a call tomorrow, but actually the tax return deadline was extended, but interest still applies for non-payment of taxes due in January. So that interest is currently running at 2.75%. But the big hit and the big penalty surcharge to avoid is actually on April, and that's if you haven't paid your self-assessment term by 31st of January, and you don't pay that amount in full or set up a time to pay arrangement by 1st of April, you actually get a £5 late penalty. That is an enormous amount and would have a big impact. So do take time and do look at that. And actually, we just highlighted there another source of finance that is available, and that is time to pay. So if you have exhausted other means, do look and do see what HMRC can actually put in place and arrange for you, because time to pay is available. But do remember that time to pay does kick in and does apply from an arrangement not made by 1st of April. So actually avoid overborrowing. Use those functions on QuickBooks and use those functions to manage your cash flow management and put that in place. Now we'll go across to perhaps a couple of questions, and happy to answer those. So Mohammed has asked, we've seen a real dip in sales over the last 12 months, and I'm not sure it will pick up soon. Do you have any advice or ways to diversify our income streams, and are there any efficiencies that we look into? Well, I think that is part of actually planning ahead and putting those situations in place. Actually where you've got a dip in sales going through, you do need that time and effort to free up your headspace and look at those alternative forms of finance. So do look at the planning exercise and actually what you'll need to avoid some of those, so you can actually concentrate on raising some of those aspects. Additionally, what I would say is, do speak to your peer group. Do use your advisors, either your accountant do speak to some of your QuickBook advisors and actually look and say, oh, am I missing a trick here? Is there something actually I could use? You may find that there's a really good export market available to you. And again, that's where you might want to kick in with some trade credit insurance to actually cover you if somebody doesn't pay you. So Caroline on Twitter has said, I know that the majority of government support has wound down, but are there any other financial support schemes for SMEs we can look into? Well, there are, and a lot of the loans are being looked at and refinanced at the moment, and many of the banks are looking at that. Additionally, you will you will have seen in the local press and the coverage, there is still an enormous amount of grants out there that actually local authorities haven't paid out to many businesses. So do look and do navigate some of those grants that are available. Additionally, if you want to look at education or software or other aspects, there are some other grants out there for those, but don't ignore the grant aspect. Additionally, as we've said, if you do owe taxes, really important to look and go, actually, I'm better off dealing with HMRC, speaking to HMRC, and actually arranging some of those deferred taxes. So spread them over time. That is what time to pay is. You're actually paying those taxes over a much longer period. So do look at that and put those in place. Really worthwhile doing that. So we've got Alice on Twitter, and Alice says the stat from the research conducted is quite worrying. What are the common mistakes these businesses make, and what can we learn from them? Actually, when you look, many businesses will look and they'll go, actually, I should have put in place a different form of finance. I should have freed up some of my own time. I spent too much time scrabbling around and actually trying to put in place finance or trying to put in place a suitable recruitment. And we know that there are many pressures on business owners, particularly on business owners' time. So really important that I would say, use that software and use your accountant and your advisor and actually put yourself in that good position where you think, actually, the finances, I know where I am, I'm partly protected, I'm in a much better place for that. You've actually eliminated one of those concerns. As we said, you don't want to be one of those successful businesses that actually cease to exist because they just run out of cash. And there is cash out there. Sometimes it needs navigating, and that's why having some of those plans in place will actually help you navigate that. Sean has said, you mentioned taking a look at our supply chain. In what ways do you think our suppliers could support us, and how should we approach these conversations? I think excellent question. Particularly with trade credit, quite often people ignore that conversation and they just go straight into terms and conditions, and actually there are delays with those. So you quite often end up with late payment, sometimes non-payment. In a large number of cases, that's not the intention of either party. But actually having some of those conversations and also saying to somebody, actually, to supply you at this particular price, we are expecting to be paid on that time. If it doesn't happen, then that price is really tough for us. And do bear in mind that all businesses are under similar types of pressure going forward. So we are seeing significant inflation come through. We are seeing actually people looking, going, eek, how do I manage all of those increasing costs? Part of that is actually being open and saying, I can supply you at this particular price, but actually I need to be paid on that time. I need to make sure I get paid through. So have that written up, have that put in those trading terms and conditions, and keep that regular conversation going. So do monitor it, do keep an eye on it. If you're not getting paid through, actually chase them up quickly. There is nothing worse than people pestering, going through. If you are in a situation where you've got perhaps a whole wide range of different customers, and you're thinking, how do I look at that payment coming through? Don't forget factoring can take away a lot of the hassle from you. So do look at that. I know there's a cost involved in that. As a relatively small amount, if you take away the time it would take you to chase some of those. But do look at that, because they'll then look at some of that chasing and getting that money through. And additionally, actually, if you've got something big which would be catastrophic to your business if it wasn't paid, to look at that insurance through to cover you for some of those potential bad debts. So we've got Safra, and Safra said, if we were to look into borrowing over this period, what are the key watch outs, and how should we be planning for repayments? Yeah, I think it is. It is always, when you're looking, and particularly at the moment, we said earlier, there's a number of optimistic businesses and businesses really looking at how they can expand. Actually, what you need to do is to factor in some of that expansion into your finance costs, because you will need more money. So, for example, a growing business will naturally need more money available, because it needs more working capital. So it is actually factoring some of that in and going with that proposition through to the variety of lenders to make sure you've got the right type and mix of finance available. So that, when we're looking at it, is saying, how do I finance my business over a longer term, particularly in a growth aspect? Because otherwise you can end up going back and looking at multiple applications through for finance, and the impression there is you don't know what's going on in your business. And actually, you do. You know that there's a particular growth strategy or how that's working. So we've got another message through, and it says, I'm really concerned about the cost of living for my employees, but also know that it'll be tight for us as a business. What sort of support could we be putting in for the team? I think really, really great question. We're seeing an awful lot of wage inflation going through. Again, some of those costs coming through from you're facing a business are hitting your employees. That includes national insurance, but actually also some of those inflationary costs. So there are areas you can look at, and actually do speak to your accountant on these. But things like salary sacrifice, might well be something where you'd look through and you'd say, how do we put some of that in place for our employees? Actually, some of that can be a really, really effective way of managing some of those expectations coming through, but actually also supporting your employees. But it is a very, very tough at the moment, and I think we're also generally seeing there's quite a lot of wage inflation out there, which is obviously difficult to manage. And obviously the government will look at areas such as interest rates, but actually that comes as a pain both across to businesses, but actually across to a number of employees. So the short term is there is probably a little bit of pain to come as well on that front. So we've now got a question which says, now that most restrictions have been lifted, we have seen a fair bit of growth in our business, although I'm sure this will level out. How much money do you think we should be saving for future-proofing the business? Well, I think that's that is always a great question. I love the fact you're looking at saving some of that. Actually, it's using and maximizing some of that within your business. So work out where you want to be and how much you want to grow by. You you're lucky and you've got great cash coming in and you've got good profitable business, actually look at how you invest that going forward into your business to future-proof your business, actually into any particular new product line, or perhaps in developing other markets. Great if you can do that with growth. On the savings front, really a personal choice, but we all know actually on the savings front, you're not getting an awful lot of interest on that. So I would say on that savings front, use some of that and decide on whether some of the debt you may have should be actually paid off or relieved. So I've got Lily on Facebook who said, I'm considering taking out a small loan over this period, primarily because some of our equipment needs updating. What's the current state is slowing down, the amount of work we can take on. If we do apply, what financial information should I prepare? Well, I think when you're looking at some of that financial information that you want to prepare, you want to really look at the return on capital and how much you're going to get from those additional pieces of equipment, and then actually look at a variety of different methods. So as we said before, you can look at loans or overdraft. You can also look actually at HP or lease, and do take into effect some of the tax consequences. As you're aware, we have super deduction running at the moment, which gives you significant tax relief on the purchase of assets. So do have a look at that. Worthwhile just spending a few moments with your accountant and saying, look, I'm looking at a significant piece of investment in equipment. Number one, I think it's going to provide me with these sales. Secondly, what are the tax implications of doing some of that? How will that actually affect my tax bill and future cash flow, and what is it best to purchase that under? You might go down a leasing route, you might go down a HP route, you might go down a simple, a straightforward loan route for that. What you plan through for that is the onward effect that piece of equipment will have on your cash flow and your sales. So do put some of that into place. Do speak to your advisor and put that in. So we've got our poll result, and our poll result, we say, do you use software to plan your business cash flow? I got 50% have said occasionally, and 50% have answered no, and nobody has answered yes on a regular basis. If you want to comment from me, actually, it's there, it's available, it's usable. Actually, spend some time and think what you need out of that software. Actually, what will help you and your business. Don't make it overly complicated. Don't make it so you dread going in and actually looking at that, that bit of business planning, that bit of cash flow planning. Simplest one I ever put in place for somebody was actually, we told them how much was in their particular bank statement each time, because they kept a very constant level of stock, and actually it depended upon what they were selling or the particular items they were buying and selling at the time as to how much profit they were generating. But we just used a one-liner for that particular client. Now, that is in its most simplest form, but you can look and make that as complicated or as simple as you wish. It is actually what helps you manage and drive your business forward. So hopefully, I would say one outcome from this is perhaps do have a look at that software. Do speak to QuickBooks advisors. Do speak to your accountant, and actually try and have a more regular look at that and protect yourself for the future. So it's unfortunate it come to an end, and I just wanted to say really enjoyed speaking with you, and many thanks for all those great questions. and hopefully you've got something from this, and you'll be able to put in some plans and protect and future-proof some of your business. Do remember, good cash flow is really important. It's critical, and you want it at your fingertips. So you want to know where you stand, and you don't want it to be one of those horrible jobs that you end up picking up on a late on a Friday or a Saturday or a Sunday, when you'd much rather be doing something else. So a bit of time and a bit of use of the software can really work. So thank you for tuning in. And if you want to connect with ACCA or find an ACCA accountant, please go to accaglobal.com. The Ask the Expert tomorrow is Lucy Johnson, and Lucy will be providing advice on self-assessment and self-assessment returns, especially if you missed that January deadline. So do also remember on the back of that importance about the payment deadline we mentioned, 1st of April, and those time to pay arrangements. So think about those as other sources of potential finance. As a reminder, if you need any more advice, additionally, do join the official Intuit QuickBooks SMB community group on Facebook, and accountants and business experts are on hand 24/7. And don't forget, the 8th and 9th, a nice conference, and hope you enjoy that as well. Anyway, really enjoyed, as I said before, answering your questions. Have a great rest of the day, and take good care, and have a quick look at some of that planning software. Take care. Bye.